Hello, everybody. Welcome to the show. This is Trading with Livevol. I'm also going to add the earnings report as well. This is where I trade my real Reg T account, and I use LVX to do it. So I wasn't on yesterday, but I had a pretty eventful day. So as you can see yesterday here, I lost about $7,300. But at one point, I think I was down like 17, 18,000. So normally, mostly because I'm pretty much long all these stocks, and so when the market went down, I took a pretty big hit. And Shire actually received a higher bid from AbbVie. So I was thinking that it was going to get a higher bid, and they did get one. But you know, the weirdest thing. So like, I was predicting them to get a higher bid. What I wasn't thinking was that the stock will go down. So at one point, Shire was down like $7. Ended up being down like 455 yesterday. So yesterday it dropped about 455, and today looks like it's pretty flat. So it was crazy ride. I think I only ended up losing a couple of grand on it total, maybe a little bit more. Curious thing was I was able to sell these for $5.50 that I bought for $5. I'll just kind of show you. So I bought these on June 27th for $5, and then yesterday, look, June 8th, I sold them for $5.50. Now, what's curious about this is the stock, when I bought it on June 27th, was trading actually $2.50 higher than yesterday. So that's what happens when volatility goes up. It just gets, you know, the options prices just explode. So basically, what the final result is AbbVie still has about 10 days until July 18th to actually like put up or shut up. So they have to make an official bid. I think what they were trying to do with the increased bid is trying to get the current shareholders of Shire to encourage the board to go into talks. I guess for me, yesterday was kind of a crazy ride. I was very disappointed that the stock went down, but in the end, I had to kind of figure out what to do next. So I've read all the articles, and my thinking is that there's a good chance that Shire will go to have talks with AbbVie, and I think that's when the stock will get the pop, right? So I'm thinking it's gonna get the pop, and then when it does, what do I do next, right? So I sold these for $5.50, which means that you know, what I made like a extra $250, not a big deal on that scalp. But essentially, I have this call spread on. If I look at my risk chart, and let's say I run it till July 18th, right? Basically, right now, what I have is right around here, let's say. I'll probably make around $34,000 as it currently stands if the stock trades around 251 by expiration, right? And my max loss is basically right here, like 21,000. So remember how I put in about 14,000? I was up like, you know, 10, 11,000, but I gave some back. So looks like I can still lose about 21,000 or maybe about close to 22,000, but obviously 7,500 of that is profit, and then the rest will be actual losses, right? So I was thinking of how to adjust. Now I was trying to roll these calls up, but none of these were that good. So let me just show you. So let's say I want to sell this and then roll it up to 40, right? The $10 call spread, and it's like 450. So if I roll this up 26 times, I essentially will almost get all my money out. And essentially have the 50 call spread left, right? So let's actually do that. And then let's say I buy 26 of these, and let's say I was able to get roughly $5, right? So if I look at my risk chart now, this is how it would look. So essentially, it'll be like, since it's out of the money, it'll be all or none, right? So I'll lose 9,300, which will be almost like break even, right? Or if they do get a higher bid, I'll make some money, which is like $8,500. So, you know, I can break even or make 8,500, and to me, it wasn't really worth it to do it, right? After going through all the crap yesterday, you know, just generally, I didn't feel like, you know, closing it out just because the story isn't done yet, right? So I think what I'm thinking of doing is I'm actually trying to buy these back for $5. So you see this July 50s, 250s. I'm actually bid. So I sold them for $5.50 yesterday. I'm back to being $5 bid, but only 3 of them. And so let's say I buy 3 of these back. What I'm planning on doing is I was kind of looking at AstraZeneca. So you remember how Pfizer was bidding for them, and then basically they walked away? If you notice, when this whole thing started, AstraZeneca was around $64. And basically after they left, it didn't actually fall back to 64. It actually went kind of like a 50% retracement on the Fibonacci number, right? So I was kind of guessing that might be the same scenario, because there might be other bidders that come in, but obviously interim, it's going to sell off. So I was thinking maybe if they walk away, most likely Shire might trade around 210, 215 is when the buyers will step in. This is just a guess, obviously, not that there is no fundamental or specific reason why, in terms of like financial analytics, why I think it's going to be there. It's just my guess on a Shire's stock price, because there probably might be other bidders who might be willing to come forth, right? So my thinking was that if and when Shire actually decides, the board decides to enter talks with AbbVie, and I'm sure even if they enter talks doesn't mean that it's a done deal, right? Because I'm sure Shire is expecting a very high premium on this share price. But I do think there's going to be intermediary pop on this price, and then I was thinking when it does pop, I was going to sell like a deep call. So like you see these 215 calls is trading right around $22, or the fair value is 22. Let's say, and you guys kind of have to stay with me here, but let's say Shire is going to trade like 243, right? Because they're going to enter talks, so $10 higher. So this 215 value would be more like selling these 205. So let's say once it got there, I would sell 5 of these, right? Let's see the risk chart. So this is after it made its move. So So I was thinking this way, I can once Shire goes up, I can actually sell those just enough calls to basically mitigate my losses, because I think it's going to go back down to like 210, right? So I'll only end up losing 10, and I still can, if they do make a deal, right, which I think it would be for a higher price it is now, I would adjust this to have this line go up higher, right? But even if I didn't do anything, I might have a chance of making 23,000. So that's what I'm waiting for. I'm waiting for Shire to stock price to pop, because they're going to enter into talks with AbbVie, and when it does, I'm going to sell one of these deep calls only 5 times to make my spread. So essentially, I'll be selling the 205, 230 call spread. So that's kind of what I'm thinking right now. I'm trying to buy these back. So I sold them yesterday for 550 because I thought it was kind of ridiculous that the stock price was down 450 and these calls actually went up. So let me actually show you. So yeah, so yesterday, if you look at these, they went down to 330, and then the high, that 550 kind right here, if you look at the red box right here, that was me selling the 5 lot, right? And the funny thing is the day before, basically it was still trading $5, right? So you see like how the day before, the couple of days before, these option prices hardly ever changed, even though Shire's stock price changed quite a bit. And it's not that clear on this one, but basically, it dropped 450 and had a low of 229. So basically, it was down like $7 at one point. I think I was down about 12 grand just on Shire, but in the end, it ended up closing only 2 because the stock rallied $3, and also the volatility kept on going up, right? Also, there were very bullish orders right on the onset. So you can see this bar right here. It's something that I kind of look at, and it was extremely bullish in terms of their order flow. So that's my thing in Shire. Now, I don't know if any of you guys are in Shire, but if you guys were, it was a crazy ride. And it's something that I don't know. I guess it's not for everyone, but you just have to kind of learn to deal with that kind of swing, and accept the fact that you couldn't lose everything, but you are making a bet because you feel like the percentage is on your side. Now, the thing that was very disappointing, obviously, is the fact that they got a higher bid, and the stock went down. Just basically didn't make any sense to me. But who knows? Maybe people felt like there's a bigger chance now AbbVie is going to walk away after making a higher bid, which makes no sense to me whatsoever, right? If anything, they might actually go hostile and raise their bid before July 18th deadline. That's what I'm thinking is going to happen, because they talked to all the shareholders, and I'm sure the shareholders said that at certain price they'll be willing to sell. And there's a huge chunk of shareholders who are U.S. funds, right? So these aren't British companies or British hedge funds. These are U.S. Domiciled hedge funds and mutual funds who basically probably wouldn't mind having AbbVie stock of the combined company and have some cash in to put away. So I almost feel like that's a great combination. If I was personally holding Shire, I might do that. So that's kind of what I think. Also, one of the other things that I look at is I look at the Shire at the London Stock Exchange, not so much here. And you can see the pop and then basically yesterday's huge sell-off. Now I think what happened here is all the speculators had to go out. So if I look at the stock price, you see this like massive volume right here when originally it went to like 223. Well, all those guys yesterday, probably a huge chunk of those guys who weren't really like investors of Shire but was trying to make a quick buck, at that point they had to get out. Like if I bought shares here, I probably would have gotten out at least half here, because now you had this unlimited, like huge downside to it, right? I'm probably in the same category, but it's one of the reasons why if you do it with options, it's a little better, because this you're kind of capped out, right? So even though I'm in the same category as a speculator, I know that once it falls below 230, I'm capped out of my calls, right? So that's why like trading options is so powerful versus just trading stock, right? Because now you actually have a limited downside. No matter what happens, you kind of have built in the floor because you have the calls. So that's, I hope I didn't spend too much time, but that's basically my whole thinking behind it. And I'll see how it goes. Now, couple of other stocks. I'll just cover IGT first. IGT, there were like massive amounts of put activity. Seems like a lot of it was selling. Let me see which one it was. Yeah, so you see this 92,000. I think they were selling these August 13 puts, but I'm not 100% sure. Just from the order flow, it looked like they were selling. And people are buying the 1720 call spread. So even though the stock is down considerably since I did it, I still have another spread on the 1720 call spread for 50 cents, right? So it's kind of crazy, but I have to look at all these trades as though I'm coming in, and not so much like how the P&L is, right? So a lot of the times, one of the important lesson I learned when I first started trading from a very experienced traders is, one day one of the traders lost like $200,000 on one of his positions, right? Now, to me, at that point, it seemed unbelievable that you can lose that much on one stock. And it was kind of like the Shire Pharmaceutical, like an event stock. It went against him, and he lost all that money. And literally, I would be in a daze, right? So if you lost that much money, you would kind of be in a daze. But another trade came in, and he actually went right back to trading. So this ability to kind of assess each trade separately and not be emotionally tied to some event that's happening is something that you have to kind of learn. Now, just so you guys know, it's impossible. It's impossible if you're a human being not to be affected by the P&L. But it's your ability to be affected, but then set it aside and then evaluate it freshly, right? So that's kind of what I'm trying to do. Also, I'm pretty stubborn, so that works in both ways. Sometimes it works for me, sometimes it works against me. I feel like it's your strength and your Achilles heel. And then also, even though I'm stubborn in my beliefs, I am willing to adjust all my positions on a fly, right? So unless I completely change my mind on IGT, I would probably still have this kind of position. I guess you kind of would know that if you've been seeing these videos, because I pretty much rode Zynga all the way up and then all the way down, just because I had this thought that it was going to go up. But anyway, that's in IGT. So I still think they're going to get a higher bid, and it's going to get done. But I'm actually trying to roll out of this. So next time IGT goes up in price to like 16, I want to sell out of these October 14th. And meanwhile, I want to buy these, like the 1720. That way, I'm reducing my risk. to just this like 1620, 1720 call spread, and it'll be more like a $10,000 risk versus the amount I have now. So that's kind of what I'm thinking. Chance of trying to make like 300% return max on that trade if possible. So that's kind of that's what I'm thinking on IGT. Now, it's funny, like this morning I couldn't sleep, so I woke up early, and sometimes I do that quite a bit just to check the futures. And I noticed like L'Oreal traded $60. I saw 200 shares trade for 60, and I saw a Shire, they were trading down another $4 to like 520, 228. So it was like it was basically it was a horrible morning. Just to look and go like, Shire's down 4. I see L'Oreal, it's trading like down $3. I didn't know what was going on, so I started reading, and basically what I found out is that, and I'll show you guys this, that basically British American Tobacco, like I told you, it's like a three-way trade. They own 42% of Reynolds. And it's reported that it's rumored that they might actually bid for the rest of the company, rest of Reynolds, which will kill the L'Oreal deal altogether, right? So that's why people are selling. People seem to think that it might be good for British American Tobacco to do this because it'll be good for their earnings. But it's all, if you go into it, you can read more about it. So basically that's why RAI popped and LO went down. I need to read more about it just because it happened this morning. My thinking is, I'm not sure how much people are giving credence to it just because LO is up, right? So we'll see how it goes. So anyway, so I have this spread on still. So I have this call spread that I'm short because I don't think it's going to get done by July 19 expiration, and then I'll have this call. And I was thinking if it kind of rises up to expiration, I could sell maybe the 70s, 72s, or 75s. I think maybe the price that it might go for is between $70 and $75. But there is this risk. I have this $8,000 risk here if basically RAI walks away and gets bought themselves. Kind of like what happened with Hillshire, right? And Pinnacle. So so this morning, so basically they can put, my thinking is they can put in the bid end of this month. So I actually did this spread. So I bought the August 65s and sold the July 65, and I did it for around 97 cents. So if you look at it, you can see the spread that I did, right? So 97 cents was what I got it for. Because I wanted the upside just in case they did make a bid, but I didn't think they were going to make the bid in the next week and a half, right? So, so I'm kind of taking a gamble that nothing is going to happen until July 19 expiration, and then afterwards I have this call just in case British Tobacco makes a bid, it's going to go higher, right? So the rumor is it could bid up to $75. Now, the reason why I felt comfortable doing this right away was this kind of reminded me of Men's Warehouse and Joseph F. Bank. If you guys recall, they went on this massive bidding war, and in the end, both of the stocks went up because it was such a boon to both the companies being able to save all the duplicate costs, right? So I think in the end, even if our Reynolds American buys L'Oreal for, let's say, 70 to 75 $5. I'm not 100% convinced that Laureate will go down. It might actually go up. So you see how you see this movement like in June 16th. Let me see if it kind of coincides with Laureate going up. So obviously when they thought something might happen with Laureate, RAI also went up. So that kind of gave me confidence that even if let's say British Tobacco doesn't buy the company and RAI, Reynolds American, decides to buy Laureate, both those shares could have a chance of going up after the fact. So that's why I bought it. I think there's I'm kind of liking this position, but I'll see what happens. But to tell you the truth, I kind of like all my positions. The fact that sometimes it doesn't work out, you know, I'm befuddled. But in the end, that's what it is. So a lot of times when it comes to trading, so I just want to kind of point to my account. So my account went from like 132, and then yesterday at one point I think it was like down to 105, right? So these huge swings. Obviously, it's not for everyone, right? But it's something that you know, you just have to accept if you think that's what's going to happen. If you don't think that's what's going to happen, then you don't accept it and you don't play it, right? So most of my losses actually came on the other stocks because I was long all these other stocks, and basically the market went down and they took it down with them, right? So I'm thinking if the market rallies back up, basically, you know, I'll make some of that money back here. But my big bet would be Shire. If Shire actually goes and decides to talk and decides to negotiate with AbbVie, I think there is going to be a pop in this Shire stock price. Although, you know, that's just my thinking. So that's it. I'm gonna actually do the earnings report now. So Family Dollar, as you guys know, everyone is in, but they want them to sell their company. So I think Carl Icahn got in here. Let's see. I just want to make sure it's not the wrong dollar store. Right, so looks like I'm just gonna look at it real quick. Right, so it was Family Dollar. So basically, Family Dollar is gonna report earnings. This was when they reported that Carl Icahn bought some stake in it. Just generally, these kind of stocks are not my favorites. Just because, you know, I don't know what's going to happen. It's not like they're going to turn around and sell it the next day, right? But there's probably a bunch of people who want them to basically cash out because they're making still pretty good income, and it could be a cash cow for everyone, and basically they're not growing anymore, right? So, and I think the management, according to the experts, is very poor. So all that combined is what's making them want to sell. But let me actually look at the stats here. So the options are implying a 3.6% move. And basically, last 4 quarters, it moved an average of 3.4%. If you look at the trade, there's more calls than puts, but basically, they're kind of in the middle. A lot of them are spreads. If you look at the last 4 earnings, looks like you made if you sold it here, but lost, and lost. So basically, anything that you buy in the last 4 earnings in terms of the straddle has been a loser if you actually ran it 5 days after earnings. So that's FDO. Let me go to fast. If you look at the stats, a lot of calls are being bought. These July 1952 and a half calls, they're pretty out there, implying a 4.4% move. The stocks moved an average of 3.8%. As you can see, just heavy call buying, but basically it looks like somebody bought these July 48 puts, but who knows? And that was the biggest trade. But look at all these quantity. I mean, it's very low, right? I mean, 2,000. That's not something you can hang your hat on. So the volatility is at the 71 percentile, so it's medium. So I would say nothing much. If anything, maybe sell. Let me see. Yeah, lose, 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 lose. So every time you bought straddles in this, it's been a loser. So selling straddles been a winner. So you can make your decision there. If you're contrarian, this is the time to buy. If you are go with the flow kind of guy, then you would be selling. Okay, Wells Fargo. They also will announce their earnings tomorrow. On the 11th before the market open. Last 4 earnings looks like down or push. It's on the 41 percentile. More calls than puts are trading, implying a 2% move, which is pretty high, considering that Wells has only moved 0.7% the last 4 quarters. So it looks like people like selling these upside calls. I guess they don't think it's going to go that much higher, so they're selling these, right? These will actually expire pretty much a day after the announcement. So this is like this is a binary event that's going to happen right here, and whatever money you make or lose, it's just pretty much going to happen instantaneously. So that's it for the earnings report. Hopefully you guys trading is going better than mine, but in the end, things could change very quickly for me. So just so you guys know, my trading account right here, even though I'm up like 800 bucks, it's actually nothing, right? So all this, my account literally could go down to 90 or can go to 150, and I would not be in terms of like the risk I'm putting on, it's actually real, right? So so I'm kind of hoping it's the 150 and not the 90, but I am accepting the risk versus reward, and I think I have a pretty good chance of growing this account. So that's why I'm doing it. Obviously for you guys, it's really important to understand risk and reward and what you're risking. So even though, like if you look at, I have 120, I would say for most professionals, if you go to any kind of professional tutoring, investing like this would be considered like crazy. But for me, I think it's a calculated play, and I think it's going to work out. So, and it has worked out for me in the past, which is why I'm doing it. Obviously, if it never worked out for me, then it wouldn't have. I wouldn't have done it. But I've made really good returns doing it, which is probably why I'm comfortable doing it, even though it's a huge amount. But I think the key is for me trying to get this account up to a point where I can trade, and it won't be that big a deal. But in the end, it is what it is. Maybe it's too big, and I have to learn my lesson the hard way. So that could be the case. Maybe I should reduce this down to like not losing 30 or 1,000, but maybe only losing 5 or 10. But just so you know, in options, you can make or lose money very quickly. So these swings are, even though it's pretty huge, it's it's kind of still in some kind of range for trading options. It's just a very leveraged product, so a lot of things can happen. But anyway, I hope your trading goes well, and I will talk to you guys on Friday. If you guys want to try Livevol X, go to livevol.com, click on Livevol X, and you can try it right here. And it's pretty much the best product out there. I really can't really compare it even to anything else, just because the other products, even though they have a lot of other features which are kind of valuable, I feel like the most important features that's available in Livevol X is not available in any other platform, and I think you are doing yourself a disservice if you don't have all those tools available to you to trade. So that's my opinion, but there's a reason why I use LVX to trade, and then I use stock charts, right? Because to me, I just want to use the best tool that allows me to make money, right? So I use FinViz, stock charts, you know, even like fly on the wall. So there's all the stuff that I use, and I'm usually relying on the things that I feel is the most useful to me. And to me, by far, I wouldn't be risking my own money, especially $120,000 worth, if just to kind of promote a product and then bet. You know, I wanted to show you guys that I'm actually really trading and not doing. I don't know. Sometimes I see people doing like these one lots, and I feel like they're, you know, sometimes maybe they're just kind of trying to display more than actually trying to make money. So I'm actually trying to make money, which in the end I might regret, just because I'm not a full-time trader, and I'm only doing it part-time. So I have to see how this works. It's basically evolving. As you can see, my P&L, if you look at the max, it's very drastic, right? So high of 47 to like, you know, low of 15. So there's this big, and you know, it was only like 4 months that happened. So, you know, I'm hoping like it kind of goes up, but in the end, we'll see how everything works out. I think I'm kind of hoping Shire gives me like a quick boost, but we'll see. So hopefully everything goes well, and you know, wish best trading and best luck for you guys, and I'll talk to you guys on Friday. Take care.